Good evening and welcome to my new video. And this video is going to be about target holding the trade to the max. All right, so let's get started. This is a very, very key aspect of our trading. I have seen many people doing what is completely the opposite. For example, when you open a trade, and you have like 30, 25, 30 pip SL. And if it goes negative against the trade, right, then what people do mostly that they will move the SL, hoping that the price will turn again in the opposite direction and make them positive. Doing so, for example, here, if I go short here, that's thinking that it's going to drop here, right? And if I go short, it goes in my, and then my SL is here. So it is going over there and very close to SL, and then a lot of people will like move the SL to here. They say, okay, it will make the turn from here. All right, no problem. Then it is keep going to the upside, then they move the SL more higher. Then this thing is keep going to the upside, right? And they end up like 150 pip negative. And then when they close the trade, it dropped, right? So that's a very bad, dilemma. So that's how it is. But the idea, the opposite is the true. It's what it is that when you have something that like positive, and you take the entry according to your rules and your setup strategy, whatever it is, and you are in positive, right? So when this thing, for example, if you open a trade here like I did, right? A lot of people, what they do is that when they are positive, like 20, 30 people, they start panicking, thinking that what if it comes down and all the profit is going to go away, right? So they think that, 20, 30 pip is enough, and then they close the trade. That's another disaster, right? Why? Because you will have negative trades, NSL hit, and losses, right? Always, everybody, me and everybody else have losses, no problem whatsoever. We're gonna have the losses, but how do we cover the losses? So if you build up a strategy where your losses are only 25, 30 pip, but if your positive trade goes in your direction and is positive, then immediately you need to know exactly where the heck this thing is going to the max. What is using different strategies, right? Different factors. Obviously, you have harmonic pattern, you have Elliott wave count. Maybe you are in wave three, which goes all the way to 1.618, and it can go like maybe 100, 150 pip, right? Or daily range, SNR levels, daily pivot, like I have here. I don't have it here right now on this one, but let me show you some other charts. For example, I have this trade, Euro USD. I closed that for 55 pip. Why? And then I have forget about these. Okay, pound yen. How the heck I was able to get this 150, 130 pip in this trade, right? You have to ask the question, why that one Euro USD 55 and why this one is 130? And a lot of people ask me that if you made an entry here, you are like 70, 80 pip. Why didn't you close? I have another entry, and this, big time all the way going to the upside. And this one I close on 95. Why not 130, just like pound yen? This one only euro yen is 75 pip, 75, right? Right. So I close the trade. This is again pound yen 125 pip. And then this is like gold taking all the way here. Every time it is going down, a lot of people will close thinking that it's going to come down. But what happened is that there is a strategy, there is a system behind it that you must learn, that if the pair or gold or anything or commodity or indices or whatever you are trading, if they start to move, first you need to know where they're starting to move in the day, the time of the day, or like according to the daily range, right? If if you make an entry early in the day when the day is starting and you have an entry, then you need to know that which pair goes where, how many pips, or how much is the daily range, right? Every pair and every instrument, every asset has different daily range. They move differently on a daily basis. For example, Euro USD in a whole day average moving pips is 75. Yet pound yen nowadays, as of July 14, the daily range of pound yen is 160 pip. Right. So if you make an entry, early entry in pound yen, that means that it will take you, you have a shot at least you have a shot at 160 pip. And if there is no other news or any other factor that will make the turn again, like no news for pound and no news for yen, and yen already have a pound good news, and because of that, pound yen is going to the upside, then what will happen? It will go around 160 pip move. He will put up his, it's not his, it's daily range to the pip. It will go at least very close, in not 160, but maybe 140, 150, right? So you have a shot at that much of a trade. So you make an early, but the thing is, sometimes you get an entry like halfway. For example, this white dotted line is a daily open, right? So if you open a trade here or you take this one, then you don't have a shot at 150 pip. You may be a shot at like 50, 60 pip, because most of the pips for the day are already gone. The day started here, right? From here, this entry, yes, you can hold a trade for 150 pip, right? But not this entry. So it's a lot of different factors, right? So you must know exactly the which pair moves how much on a daily basis, and where is your entry. And there are some other factors as well. So in my course that you take, one-on-one, or then I have videos there explaining all those small factors that you put together, and then you come up with the target. Coming up with the target, which is much higher than SL, your stop loss. It's essential in this trading business, right? So sometimes what happens is that you have a 125 pip trade. Now, if your SL is only, like, for example, in my strategy, the SL is always 25 pip hard SL. If I'm wrong, maximum I can lose is 25. Most of the time, what happens is that it goes 25, 30 pip in my direction, and I move my SL to break even, and it comes back and hit. I am out with no loss, right? So I'm minimizing my losses, very minimized loss, right? But when the trade is going in my way, I know exactly where the heck it's going, and then most of the time I'm like 80, 70 pip, 80 pip, 100 pip, 115 pip, stuff like that. So that the ratio between the losses and gains, it must be much higher for in order to be on the positive side. All right. So this is one of the very important thing in this trading business, which I teach in my one-on-one, and make you perfect target catcher. Right. So you find the target and you catch it. That's the thing. Right. And don't be afraid, because if you keep looking at the chart, you might end up closing here, or if it's dropping, oh my God, it's dropping. Okay, close it. It's gonna eat all of my profit. No, if the cat bad news is in the air, or let's say pound good news came out, this thing will go all the way. So it's coming down, but it's not gonna hit you yourself. So sit tight. It came close. It went up again, up, and then I'm watching my daily range, and and close like this, right? So this is it for now. Just wanted to show that, pay attention to what you're doing as for the SL and your TP, right? The ratio in between these two has to be much higher, but you cannot have one size fits all either. Like, for example, a lot of people say, oh, I use 1 to 3 ratio, but you cannot do that. You can't, because every instrument is different. Euro USD, you can't do 1 to 3, because you must have 1 to 2, maybe. That's it. But on pound yen, you can do easily 1 to 5, 1 to 6, right? Pound Aussie, 1 to 5, 1 to 6, no problem. But it also depends on where the entry is. So learn. I'll show you how to find the target based on every single thing. For example, this one, this is like a harmonic pattern, right? So I had, when it was going from this bouncing, I had this trade, I had this trade, and I had this entry. This one, the first entry, it went, close, drop, again, make the entry all the way this one, and my son took this one. So we had all of that. This one, just today, Sunday, I had this trade from here to here. Beautiful harmonic patterns, both of them, this one and this one. These are my own patterns, which I call the failed patterns, right? Nobody teaches out there, but I'm not only teaching these, but I'm practically taking trades and showing. this is what it is, and then my trade is from here to here. It's somewhere here. Let me right there. This is today, Sunday, 14. Early in the morning. See this white dotted line? So I got in early in the morning time, and then it was bouncing from this 23% line and got the entry, and then took it all the way to 127. It's not shown here, but this is what happened. Bounce from here, got an entry here, hit the target. See, so plan and find out how to exactly know what the target is and take it to the max. That is the key, and then you will be positive. I show my weekly like recap, right? So you see the pips is more than 1,000 most of the time, but that's not 100% true. Means that I showing you positive, but what about my negative? My negatives are like maybe 400, 500. So I'm still positive 500 pip a week, but then, don't think that I don't have losses. So of course, everybody has it, right? But the ratio between the losses and the gain it must be higher, much higher, right? And then that's the only way you can stay positive. All right. So there's it for now in this video, and hopefully that will help. And if you want to learn exactly step by step what are the different factors to find the target and maximize your profit, then I suggest that you either take my course or sign up for one-on-one and become master of this mumbo jumbo. All right. So bye for now. And I have 30 minutes to do my webinar, Sunday webinar at 4:30. I do for all my subscribers, and we go over the charts and this and that. My analysis and possibilities for the next couple of days, and then I do a webinar on Wednesday 4:30 again to do take care of the Thursday and Friday. All right. So this is it for now, and hopefully I'll talk to you in another video.